Today's video is a must watch if you're a veteran looking to buy or sell a home. We're breaking down the difference between assessed value and a property's purchase or selling price and what that means for your property taxes and your overall budget. But that's not all. If you have a service connected disability, you may qualify for a property tax exemption that could eliminate your property tax bill. We'll also cover how that impacts your qualification for a V loan, especially if you're using a V loan versus other loan products. So let's jump in and cover what you need to know to make an informed real estate decision. Now, let's first talk about the basics, which is what is assessed value. Assessed value is a figure your local government determines when calculating your property taxes. It's not meant to reflect what your home would sell for on the open market. Here's how it's usually calculated. The assessor looks at factors like the size and location of your home and recent renovations and the local market, or even they'll assess it when a property is sold. It just really depends on the resources of the area, which is typically the county. Now, however, these assessments are often updated periodically, sometimes annually, and sometimes every few years, or if there's a budget shortfall, they may also make an adjustment. This means the assessed value often lags behind current market conditions. Understanding this is key for veterans because the assessed value can affect your property tax bill and in turn your overall housing budget. Now, in fact, taxes over time usually go up along with homeowners insurance, so you need to track both after you purchase a home so you don't have a shortage in your escrow account causing your payment to go up significantly. We see it all the time. Now let's talk about purchase and selling price. This is the amount a buyer is willing to pay for your home, or the amount a seller is willing to accept for a property. Unlike assessed value, purchase price reflects real-time market dynamics, including factors like location, demand, and even buyer preferences. For example, in a competitive market, buyers might pay well above asking price and well above the assessed value. So what's the takeaway here? The purchase price is about the home, what the home is worth for you or the buyer, and not what the government thinks it's worth. It also contradicts the appraised value because they look at past closed transactions in your area to similar homes and what a buyer would pay for. So you have to be really careful with that because sometimes people will come in and say, well, the assessed value is X. Why am I paying more than that? Again, two very different components. Now, let's bring in a key benefit for disabled veterans, which is the property tax exemption. If you qualify, you might not have to pay property taxes on your primary residence. Now, this exemption can be a game changer for your monthly budget, and I have a video like that on the channel, so make sure you guys check it out. Now, here's how it works. The exemption varies by state, county, city, but in many cases, it applies to veterans with service-connected disability rating of 100% PNT or a specific level of disability. This is, again, why you have to do the research in your county, city, state. And in some states, the exemption covers the full assessed value of the property, eliminating your tax bill completely. And in other areas, there's a limit on the assessed value that it will cover, and sometimes anything over that is not covered. Sometimes you just pay the difference. Now, if you qualify, this can significantly reduce your housing costs, but it's important to understand how this affects your ability to qualify for the actual loan. Let's talk about this. Let's talk about how this exemption impacts your loan qualification, especially if you're using a VA loan versus other loan products. Now, if you're using a VA loan, some lenders can qualify you without factoring property taxes into your debt to income ratio or residual income if you have the property tax exemption and you can prove that that area has it. This can increase your buying power and make it easier to qualify for a home you want. Now, one thing to note, you still may have to escrow the property taxes because tax exemptions come into play at different times of the year, so you may still have to pay for property taxes for a certain period of time. Now, if you're not using the VA loan, most lenders will still include property taxes in your qualification, even if you have an exemption. This is because non-VA loans don't always account for state-specific benefits in their underwriting guidelines. This is a critical distinction for veterans to understand because the VA loan program offers unique benefits tailored to your needs, and this is one of them. So if you qualify for the tax exemption using a VA loan, this can be a significant advantage to you. And oftentimes, veterans do get steered away from using their benefits, which I still am blown away that this happens today. I just had a call with someone the other day about that. So make sure you guys focus in and learn the benefits. Now, to help clarify, let's look at some examples of areas in the country and how it affects you. Let's say, for example, where property prices are high, a disabled veteran with the tax exemption may save thousands on annual property taxes, which could mean qualifying for a higher priced home with a VA loan. Now, remember, this is your budget, not mine. I'm giving you guys some just examples of areas so you can kind of see what you can and can't do, because some places are really expensive. Now, in Florida and Texas, where property taxes are a larger percentage of home value, the exemption could make an even bigger impact on your budget. Now, in areas where taxes are generally low, and we help people across the country, so we'll sometimes see $500,000 properties with like $2,000 in taxes. That's a dream. In other places, it's like $500,000 property, and they have close to $20,000 in taxes, which is also mind-blowing. But still, no matter what, even if your taxes are, real estate taxes are low and you can get an exemption, it's still a win for your budget. So now you can take that money and do something else with it, or it can help pay towards utilities and whatever the case may be. Now, the point of this is where you live and whether you're using a VA loan will play a big role in how the exemptions benefit you. Finally, let's revisit why assessed value and the purchase price are so different. The assessed value is calculated based on government formulas, and they're also looking at historical data. Purchase price reflects what someone is willing to pay in today's market. And property tax exemptions can further complicate the relationship between these numbers. We also see that where veterans that have a disability are selling a property and the veteran coming and buying it, and then the property doesn't have a tax assessment, that tax assessment will be updated, and it really depends on when, and this is why you have to do the research on your local government. Now, if you have a disabled property tax exemption, you may not see direct impact on your monthly budget from the assessed value, but it's important to understand the overall planning that goes into this. Now, let's wrap up with some key factors and some takeaways for you guys. Assessed value is used for tax purposes, while purchase price reflects the open market. If you're a disabled veteran, a property tax exemption can eliminate your tax bill, but how it affects your qualifications depends on the type of loan you're using. And most importantly, the VA loan programs offers unique benefits for veterans, including the ability to qualify for a property tax exemption. And I want you guys to know something important. If you're a surviving spouse, this benefit typically will pass on to you. This is why it's also important to understand your VA disability benefits. If you guys found this video helpful, please like, share, and subscribe for more tips on navigating real estate as a veteran. And remember, our goal is to help make informed decisions that support your financial success. Thank you for your service, and I'll catch you guys on the next video.